On March 14th, U.S. 10-year yields moved decisively through the 2% resistance level to print a high of 2.135. Now, this comes days before a pivotal FOMC meeting, which the market is overwhelmingly pricing in a 25 basis point hike. Now, what's interesting about the rise in 10-year yields is its significant lag to rising short-end yields that have moved the 10-year minus 2-year to a low of 0.22, which is down from a high of 1.29 back in October. For some perspective on that, if the yield differentials remain constant, that would imply a 10-year yield currently near 3%. Now, it appears that the 10-year is struggling with a couple different narratives. One, the Fed is sunsetting its bond buying program and simultaneously hiking short-end rates, which on balance could allow rates to move higher. Two, inflation pressures that do not appear to be abating anytime soon, that also could move rates higher. Three, all of this is against growing concern that high inflation, particularly in oil, could drive the economy into the next recession. Now, if a trader believes that the move above 2% and the slight steepening of the yield curve is an early indication of things to come and that 10-year yields could rise, they could express that thesis by buying the CME Group March Micro 10-year Treasury yield futures contract at a current level of 2.12 and target the 2019 highs of 2.75. A stop for this trade could be placed at 1.90. Now, this trade could profit $630 if your target is reached and risk $220 if you're stopped out at your level. Now, if a trader believes that geopolitical concerns or rising prices could put some greater recessionary pressure on the economy and that 10-year yields could go back lower as a result, they could express that by selling the March Micro 10-year Treasury yield futures contracts at 2.12 and target the 2021 low at 1.20. Now, a stop for this trade could be placed at 2.35. This trade could make $920 if your target is reached and risks $230 if you're stopped out at your level.